Welcome to the Defense and Aerospace Report. I'm Vago Muradian here in downtown Washington, D.C. at PwC's offices, here to talk to Scott Thompson, who is the U.S. Defense and Aerospace lead for this great consultancy. Scott, great seeing you again.
Great seeing you too.
It was a pleasure. We spoke earlier in the year in terms of what are some of the trends to expect in the merger and acquisition space. You guys have an updated report. I want to get to that in just a second, but you were at the Royal International Air Tattoo,
right.
Where we saw each other apparently glancingly.
That's right.
We were both hard at work. It's a tremendous event on the 100th anniversary year of the Royal Air Force as the world's first independent air force. But you were also in London. We certainly covered Farnborough as well. What were some of the elements that you picked up while you were there? You know, there were concerns. You know, good news, there was more spending, certainly in the United States, certainly in Europe. There were concerns about transatlantic trade tensions, tariffs on aluminum and steel. What were some of the key takeaways you had from some of the meetings you had over there?
Sure. Well, first of all, Riyadh was a fantastic show this year. It was the centenary of the Royal Air Force, so they did a lot of special things around that, and that was fabulous to see, and there was some really exciting flying. And then, of course, you know, Farnborough was right on the heels of that. And so I think, you know, overall, you know, I would say very upbeat, you know, especially on the defense side. You know, defense spending in the U.S., the largest, you know, defense market, is up, you know, 20% plus, you know, since the Trump administration took over. And we see a real resurgence in Europe and other parts of the world that's generating, you know, good opportunities for defense contractors. So I think very upbeat there. Likewise, for commercial aerospace, we're having another 7%, you know, year-on-year growth in revenue passenger miles. I mean, just incredible. I mean, the thing that I like to say is that, you know, how many different sectors can you point to that are growing at more than double global GDP? So I think all that, you know, overall very, very positive. I think there are some concerns about, you know, the trade landscape and how is that going to play out? How is that going to manifest itself specifically to, you know, the global economy and specifically into aerospace and defense products, more so on the commercial aerospace side. But a lot of that's evolving, and I think, you know, people are kind of taking a wait and see approach. But you know, it is an area for a little bit concerned, but monitoring the situation, I'd say.
In one of the situations that you're monitoring, did you like that nice smooth segue into your report? Talk to us about you know, you're constantly adjusting, you know, what you're seeing, you know, kind of constantly refining the model. Talk to us a little bit about, you know, how you guys performed for the first quarter on expectation, and then what is it that you expect now, you know, in terms of the merger and acquisition prognosis for the year?
Well, the M&A market in aerospace and defense is very, very strong right now, and it's been that way. We're going on the fourth year. It's really been strong. So you go back, preceding that, we had about a 4-year period from 2010 to 2014 where it was really, really soft. And part of the reason it was soft was because of the sequestration law that was passed back in 2010, and it created all sorts of uncertainty. You know, as you remember, the effect of the law was delayed, you know, several times, and it finally took effect, but then there was compromises around that. So it created a huge amount of uncertainty in terms of, you know, what defense spending was going to look like and where the priorities were going to be. And as a result, very hard to value defense companies when you have that much uncertainty. And it caused a situation really for about a 4-year period of time where we had almost no what we would call mega deals for defense companies, those deals greater than $1 billion. So that period of time sort of ended with some of the compromises and then with the Trump administration and the increase in defense spending. So that's kind of been taken off the table. And at the same time, you know, you've had an improving economy, an accelerating economy, and particularly the past, you know, couple years since we've had, you know, tax reform has really put some extra, you know, cash into companies' balance sheets, and they're looking at, you know, their capital deployment strategies and how can we grow. You know, we went through a period of time where we saw a lot, especially on the defense side, a lot of return of capital to shareholders. And I think the expectations both of shareholders as well as, you know, management now is how do we have a more balanced, you know, capital deployment strategy and really invest for growth. And by the way, it's not all about inorganic growth through M&A. I think there are tons of opportunities for product development and, you know, internal investment to grow organically as well. And I think companies are looking at a balanced strategy of capital deployment for organic and inorganic growth.
So what are some of the, because look, one of the criticisms with the tax measure was, look, this is going to be great for buybacks. Companies certainly have focused on doing that, whereas not as much on the investment side. A little bit concerned that folks, that this was going to go basically to dividends and the buybacks. Talk to us a little bit about what you see companies do in terms of making that investment. We've heard that the Pentagon wants that from its contractors. Right. That message hasn't changed despite a change in administration. We've heard that from Ellen Lord, Mike Griffin as well has made that point that, hey, look, we need industry to make some of these investments, bring some of these technologies to our attention. What do you see in terms of these pockets and how these companies are trying to differentiate themselves with putting some of their own skin in the game?
Yeah, so I think what I've seen so far, and it's early days, right, in terms of tax reform. We're still in the first year, but what I've seen is a balanced approach to capital deployment so far, where companies are returning some of that money to shareholders, but they're also investing it. They're investing it by somewhat increases in R&D, and also investing it in their employees, some higher pay raises, some bonuses, but also a lot of employee training. And that's really important because we're really in a period now. People talk about this really accelerated growth in technology and how hard it is for everyone to keep up with that. And we need to create a workforce that has the skills, particularly digital skills, that are needed for the future. So we've seen a number of companies, investing more in their employees to upgrade their skills capability as well.
Valuations are pretty much almost at an all-time high. I mean, properties are going for really tremendous multiples, and fortunately, there's still demand there. How much more up is there in this, right? I mean, I know I'm just fascinated by this. Banker friends of mine are fascinated by this, but hey, it keeps going, and everybody's going to be riding that. How much more upside is there here on these valuations from your standpoint?
Well, I'm gonna tread lightly in this area because no, I haven't found anybody who's a real prognosticator of the future yet. But my view is that we are still early days in this economic expansion. I know not everybody has that same view, but I think some of this tax reform has created a lot of tailwind, which we're only at the beginning of. So the economic signs are still quite positive. The economy is still economic growth is accelerating. So I'm still optimistic that we've got some good runway in front of us.
And when it comes to deals, right, everybody has been looking at Orbital ATK. What are some of the lessons? There was a consent decree on that. There are some folks who debate, boy, on the one hand, they could have done this very early on to do it. On the other hand, boy, we're not even sure that was a consent decree worth negotiating. From your standpoint, as somebody who's looking, what were some of the lessons learned from that? What are the lessons that other companies are taking from looking at that transaction as they weigh how they're going to deploy their cash in terms of whether it's going to be a merger situation or an acquisition situation?
Well, we don't talk about any specific, deals.
I should have put that disclaimer out, actually.
At least from a qualitative standpoint, we'll talk factually about them. But no, I think the things generally that companies are looking at they do have extra capital, right? So they're looking at their capital deployment strategies pretty hard, and they're looking at their portfolios and looking at portfolio reshaping, look at upgrading the portfolio. It includes divestitures if they think there's something that doesn't fit in the portfolio or doesn't have the kind of growth that they're looking for. And the thing about acquisitions and generally that we say is you have to have you always have to have a value creation strategy coming from your acquisition, and the execution of that and the quick execution of that is critical, because if you don't fully execute or if it takes you too long, you never can really recover from that loss of the time value of money. So I think speed is of the essence. Have a good plan going in and get after the execution straight away.
From a transatlantic perspective, I just want to get a little bit of flavor on this, right? There was a lot of European attention going into the U.S. market, trying to expand. You had Leonardo expand its footprint in the United States. BAE Systems, much the same thing. Thales also has done Airbus, a couple of big deals in the United States. Companies like Thales have done, Safran have done some portfolio shaping, obviously focusing more because of the Zodiac acquisition on the commercial aerospace market, reduced their defense footprint in the United States a little bit, but looking again at sort of reshaping that portfolio. Do you still see or expect to see a lot of overseas interest in the U.S. market to try to expand their foothold on what is an expanding, or at least, you know, through 19 at least, going to be a growing market?
Yeah, I think there's, I mean, not only in aerospace and defense, but even more broadly than that. One of the interesting things we've seen is, you know, PwC does a annual CEO survey, and there are many, many different types of questions that are asked about that. But one of the questions has to do with kind of geographic focus. And it's interesting, over the past couple of years, we've seen this shift from China, in particular, and Asia being at the top of the list, to now the United States being at the top of the list. And that's because of the economic growth and because it's such a big market, and it's growing. And so you've got a lot more attention strategically, and that includes acquisitions, and it includes also, you know, aerospace and defense companies.
I mean, everybody I talk to, they're like, look, 19's another strong year. Looks like it's going to be a very, very strong year. NDAA president's about to sign it. If you look at 2020, folks are saying, look, you know, maybe a little bit of growth for inflation, but it's going to be largely flat. Or other people say, well, the inflation headroom might not be there, so you might be actually decreasing. What's your bet? You're still pretty bullish for continued growth?
I am pretty bullish. You know, obviously, you know, we've had a good run, so, you know, as you move out, you get tougher compares, right? So it's hard to keep growing at the same pace. But look, I think, you know, the latest numbers indicate, you know, a very, very solid, you know, economy. So, you know, until I see a change in those numbers, I'm going to remain optimistic.
Fantastic. Scott Thompson of PwC. Always a pleasure, Scott.
Right.
Great to see you. And I'm sorry we didn't get to spend a little bit more time at Riyadh, where you guys were a sponsor. You had a nice booth there on the flight line so that folks could get right up close to the action.
Thank you for the shout out. Yeah, we had a great booth. We really enjoyed it. We have to make sure you stop by next year. So.
I missed you this year. I was there the year before, as I mentioned, and thanks as always for the hospitality.
Great seeing you.